Hey, this is Jack from Alpha Charts with a blurry camera. Today is December 9th, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Thank you all for watching the video. It is state of the market Saturday morning. Before we get started, you can follow me on X as well at AlphaCharts365. I'm posting things there all week long. Interesting, what I think is interesting things, mostly market related. I do post some of my scans there as well. If you really like my stuff, I do run an educational subscriber group. It's $10 a month, but it is the deal of the century because you get multiple videos throughout the week. You get focus list video. You get midweek video. You get market notes on Sunday and Thursday. I do market notes, annotations of the setups. Again, scans every single day of my best scan, and again, all kinds of bonus content. As well as direct access. We have great conversations with members about what's going on with their trading, and it's again only $10 a month, less than a Chipotle meal. So it's really a great deal. And if you don't like it, you can always cancel, right? It's a month-to-month type of thing. So it's no big deal, right? So at Alpha Church 365, start the new year off, right, hopefully, and I can help you hopefully make more money in the markets. That's the whole idea. All right, let's get to the video now. Starting with the SPY, where are we? So we have this beautiful inverse head and shoulder pattern trying to form. We don't know if it's going to form or not, obviously, but we are seeing some expansion in volatility that is happening in this area. We're not seeing it on the VIX yet, but this is definitely, compared to here, expanded volatility. You see the ranges are starting to get much wider every day. And so the break of this, right, the break of this area is going to be really, really important, right? Because that's going to probably dictate which direction the general market goes for the next few weeks, or potentially even a couple months. So I think it's a big deal. So it's definitely something I'm watching to see what happens, and we'll go accordingly. But I definitely think we could be ready to make a right shoulder here, which would just set us up for a much, much bigger move if this does confirm, right? That would be amazing, because you're talking about almost a 5-month pattern. It's a big deal, right? It's a big deal. Looking at, let's see what we did for let's go to RSP. So the equal weight S&P, you see it came all the way back, came back. There's really not doing anything wrong. Just like the SPX, as of right now, not doing anything wrong, consolidating. Very likely, very possible, I should say, not likely, but very possible it gets into this, purple zone. There's nothing saying that it won't. We have a nice 50 starting to move higher. All the other moving averages are moving higher. The 200 is flattening. So that's all really, really positive things. Yes, it can move higher. I wouldn't be shocked if it did. It could also, listen, this could also be a potential area of resistance right here. Not as strong as up here, right? Because when we zoom out, you see how strong this line is. But this area right here has some potential resistance as well. We'll see. But there's nothing here. Again, nice tight price action right there. Nothing is saying to get bearish right now on the RSP. Let's look at the Qs. There you are. And here's the Qs. And we're still in this general area. We've been in this area for a while now. And you could kind of see it's got a little bit of a broadening pattern as well, right? Something like that. So you see how it's starting to get a little wide in there. Yes, we could come up to this 397, 400-ish area. That'd be fine, right? But it's a bigger level of resistance. And again, it's a beautiful pattern. And I'm just saying that when we get into here, I'd probably be a little bit cautious on what's going on in this. If we do get up that way, 397 to 400, we've really been stuck in a range since November 20th, right? I mean, really, this is just one kind of wide range. And we saw that in SPX as well. We saw that in RSP and equal weighted Qs, a little bit nicer looking, and you can kind of pull it here. Again, equal weighted Qs coming right into resistance, and so far just going sideways, right? Not doing nothing terribly wrong, but not making progress either. Like if you bought the equal weighted Qs since November 29th, which is roughly 2 weeks ago, you haven't really made any money or lost any money. It's just been a sideways kind of chop, right? Doesn't mean it's a bad thing, but again, this has been prior resistance, and we have seen pullbacks in the market when we reach this, we'll call it $80 or so area, plus or minus a little bit. And so that's just something to take note of, right? Like, I don't know if I want to be aggressively long into this $80 area. Maybe it needs a little pullback. Maybe this is, it's inverse head and shoulders, which is drawn out here, that we may need. Let's get rid of this line. It doesn't help us. Maybe it needs to make a right shoulder before it can break out and we get very, very bullish again. That's possible, right? But am I bearish right now? Well, nothing is saying be bearish. It just isn't. Let's look at mid caps. Yeah, MDY. There you are. Here's your mid caps. I mean, just a strong move off the bottom. Still have, moving averages that need to align more bullishly. So we may see some chop, but again, just giant move and really just flagging out here. 500, that's the spot where you may find some resistance, and we have room between now and 500. Another 3.86%. So that would be absolutely fine to move that way, and I would, nothing saying that it won't. Again, kind of declining volume as it's consolidating. Don't so again, I can't be too negative on that, right? It's just moving sideways, and you're not seeing a lot of selling pressure, at all in here. So for now, everything looks really good, and IWM looks roughly about the same. I think there's a good chance that again it makes up to this bigger area that's 5 or 6% higher. Again, nothing is saying that it's not going to continue higher. You're starting to see these moving averages starting to bullishly align, but things look good. Things look absolutely fine. So on the index level, maybe some resistance overhead. Short term, maybe we got to make a right shoulder on some of the things that's out there, but overall, things are okay. Things are just fine, right? Again, knowing your time frame and risk tolerance matters in these inflection points, though. I guess maybe that's the big take home, is that if you're a shorter term trader, you may see some pullback or some problems. If you're a longer term trader, things don't look bad yet. Let's look at the individual names. Here's XLF financials, right? Just like IWM and mid caps, right into this general area, and it's flagging. Again, not doing anything wrong at this point, but there is a little flag. We do have a cross right there of the 50 over the 200. So the expectations are that whenever this consolidation is over, we should be moving higher, right? Because things are starting to really move higher as well. And they break above $37, right? And that's in the next leg of the bull, for financials and probably for the rest of the market is going to start. And so I'm going to get rid of this line again. It's not necessary anymore. But right now we're just in a range, and this is just a really big bottom that's, almost 2 years, a year and a half in the making. So it's a big deal. That's a big deal. On the low side, though, $30 is what has to hold, right? That's the big level to the low side, but we're not even close to that. Let's go to SMH. maybe the most important sector that I follow is SMH. Again, you have this big, beautiful cup and handle look, base, whatever you want to call this. You had a want to be breakout right there. And now what do we have? We still have bullshit line moving averages. And now you kind of have this little trend line area. You have 1, 2, 3, fourth touch of the trend line. So you do have lower highs and lower lows in this little area. Let's see if we could break the trend line. That's a big deal. I think a break of this trend line, will be again the next leg higher. And if it rolls over from here or makes gets below this pink shaded area, that's more of a problem for me, right? So I think 156, we'll call it, has to hold on the downside. 156 has to hold and get break of the trend line. And I think we're off to the races in the semis and probably the broader market as well. So that's kind of where I'm watching here. Again, could go either way, but it should break higher. And if it doesn't break higher, if it breaks lower, that would be the information that says we should get more cautious. Looking at XSD, this is the equal weighted semiconductors. And it is obviously doing recently better than the cap weighted. So, NVIDIA, even AMD is in the cap weighted, Broadcom, all those that are pushing and keeping the cap weighted higher, the equal weighted, which has those on an equal weighted basis, is already breaking out. So that's a very positive for the market. Again, it was a laggard, right? It was a laggard, but now it's doing pretty good. And I was expecting it to pull back some, and it just didn't. So it's just starting to move higher, and that's great, right? Very good for the market. Let's look at transports. Again, looking good, recovering nice. Hard to be bearish when you have transports, gapping up 3.5% and just moving basically sideways. Looking at IYT, again, looks basically the same. Big move higher, and then basically a sideways move. And then let's look at home builders. XHB breaking out to all-time highs off of this, again, cup and handle. Look to it. Looks great. And then looking at ITB. Actually, I probably shouldn't even do that. You guys can see this. This is just something that, for my subscription group, we had talked about getting long the home builders off of this consolidation where it hit the 10-day, and everyone that has gotten long that has done very, very well for themselves. Again, breaking out to all-time highs. Let's go ahead and just zoom in here. You see, love the way that looks. Again, there's your breakout, and it's just continued higher. So things are, doing very well. So indexes are holding up well, even though there may be some question marks in there. The sectors, though, look really good, right? Absolutely. There's none of them that looked bad. Again, maybe up to some overhead supply, maybe needs to chop around a little bit, but nothing looks bad yet, right? Where no real sell signals. Let's look at the internals. Starting with the VIX, let's get these moving averages off of here for now. VIX at 12.35, again, looking absolutely fine, very, very low. As it's been in this general range, is reminiscence of this area right there where you saw, it get very, very low. It kind of spike up some, like here, right? Comes back low. It may spike up again. Don't be shocked, but it doesn't mean we're out of a bullish time, right? So I think this is the most similar to what we're undergoing now is this 2019 area, right? So again, we may get a spike that could create that right shoulder in the SPY that we were talking about. That could cause, just a little reset, shake out the excessive bullishness, and then we go right back to it. So that'd be, again, a bullish scenario depending on your time frame. You have to know, am I a short-term trader, medium-term trader, long-term trader? What is my time frame? Because if you're a short-term trader, you really don't, you get hurt with this type of spike in volatility, right? if you're a medium or longer term trader, you may not mind it, right? So you have to determine what is your time frame. But let's keep going. Looking at credit spreads, I think they're probably going to be just fine, which they are, all the way to the bottom of the range. We'll see if it breaks lower. If it does, that would be pretty significant, I think. So we'll see. Let's see at let's look at the breadth. MMFI. This is the percent of stocks above the 50-day. We're getting into that, again, 80 or above is my red area. We're at almost 75%. So we're in that frothy-ish section. You see how we get to the 80 and we had some pretty decent pullbacks. And here we didn't even get to the 80. We got to about 77 or so, or this general area. And you see we got some pretty good pullback. So 75, 80, somewhere around there. We're in that area where a pullback can happen. So that's what Breath is saying. We're overdone just a little bit. You see, but there's been times where we've stayed up here. There's been times where, we could stay up there for a little bit, right? This was the 2019 area with the VIX, right? We didn't really get up there. There was enough shakeouts before that 80% area where it kept us, so we didn't get too overdone there. And again, we may be in that area, right? Didn't quite get there here, didn't quite get there here. It could be part of that type of process. So just be aware of that. And then the put call ratio, equity only. Again, we're getting, in that bullish time frame. And you can see in 2018, let's just go back and look at that here. It didn't really get to that overdone. It never got to that, 2019. It got into the bullish range, which is this area right there. And again, when we go back and let's try to get both on the screen, that is basically what we're kind of chopping around in recently right now, this bullish range. So if we're in a 2019 type scenario, we could be here and never get overdone too much where we get just enough of a pullback to keep people from getting too bullish going forward. Okay, so right now though, no signal and it's not overdone at all. So that all looks good. We'll round this out with the dollar index and the dollar at like these bars. We might get some sort of, move higher into this 104-ish area, but looks more like a, bear flag, even though it's a little long in the tooth for a bear flag. 101 is the big support. And we could potentially even pop right back into this 105 area. And that would be, again, if there's a pullback that happens, good chance the dollar is rising. So that's what I'm watching right now. And you can see, let's put the moving averages back on. You could see that price is kind of holding the 200-day and just kind of moving sideways here. So we'll see which way this breaks because, it could, what happens if it breaks higher into, that area and then maybe it comes lower, right? And that is the next leg. So those are the two potential scenarios for the dollar. I wouldn't be shocked if we see 105, 105.50-ish get retested. And we're going to finish this off with the 10-year. I talked last week about it coming into potential support area, and there's your potential support, and you saw the bounce right there. So the bounce could be, a little bit stronger over the next few days. That would align with the dollar bouncing. That would align with the pullback of the markets, VIX spiking, right? Those are the different pieces that we're looking for. The increased volatility in the indexes, the broadening formation. So that's all stuff that dovetails together for potential pullback to happen. Again, knowing your time frame is the most important thing you can do. So let's finish this video off with back to the SPY. And yeah, so some sort of pullback. Again, we could even pull back all the way to the 50-day. That is something that I'm watching for. Doesn't mean it's going to happen. Again, if we break out, then follow price, right? That's the answer. But again, this type of volatility, everything else that's lining up, I think there's a good chance that we could see some sort of pullback retracement, maybe even gap fill here and that'll be right about where the 50-day is. And that would be, that would be the right shoulder. And that could potentially, lead to a much bigger and stronger move higher. And that'd be great. All right. So good luck. Take care this week. If you haven't done so, go ahead and subscribe to there we go. Subscribe to my subscription group, right? It's $10 a month. You don't like it, you could cancel anytime. And it doesn't all you're in is for $10, right? The 1 month. But I think you're gonna get a lot of value out of it. I give you guys every day, I think, a ton of information, and it's worth, for $10, the amount of time I save you by doing the market research for you is significant. So go ahead and click the subscribe button. All right. Take care, guys. Bye.